There are 11 real bills that many seniors are legally allowed to reduce or eliminate entirely in 2026. Most people never apply for a single one of them, not because they don't qualify, but because nobody ever told them the programs exist. Every item on this list is a real federal or state program, and we'll tell you exactly where to apply for each one. According to AARP-cited research, roughly 8% of eligible seniors actually apply for the property tax relief they legally qualify for. That's not a typo, the other 92% are leaving real money on the table year after year simply because these programs require you to apply. Almost none of them arrive automatically. We're going in order, starting with the fastest wins and building to the ones worth the most money. Every number and program name in this video comes directly from the federal agency or state office that runs it. Medicare, the IRS, the Department of Energy, or your state's own tax office. Number 11, National Park Entrance Fees. Let's start with an easy one. If you're 62 or older, the federal government sells a senior pass that gets you into more than 2,000 national parks and federal recreation sites for life for a one-time fee of $80. Here's what makes this one worth mentioning right now. As of January 2026, the standard annual pass for the general public also costs $80. That means the lifetime senior version is now the same price as 1 year of the regular pass. If you visit federal land even occasionally, this one pays for itself almost immediately. What to do? Buy it directly at recreation.gov or at any national park entrance. Bring ID showing your age and residency. Avoid third-party websites that mark the price up. Number 10. Vehicle registration and license plate fees. This one is very state specific, so the honest answer is check your own state because the rules vary enormously. In Illinois, the Benefit Access Program lets qualifying seniors renew one license plate for a flat $10 instead of the standard fee if their household income falls under roughly $33,500 for a single person. In Pennsylvania, retired residents with income under about $30,000 a year can register one passenger vehicle for an $11 processing fee instead of the full registration cost. Other states, from Alaska to Virginia, run their own versions with different income and age rules, and some states offer nothing at all in this category. What to do? Search your state senior vehicle registration discount or call your state's Department of Motor Vehicles directly. It costs nothing to ask, and the form, when it exists, is usually one page. Number 9, your phone and internet bill. The federal Lifeline program, run by the FCC, provides up to $9.25 off a phone or internet bill every month for qualifying low-income households, and up to $34.25 a month on tribal lands. To qualify, your household income generally needs to be at or below 135% of the federal poverty guideline, though you can also qualify automatically if you already receive SSI, SNAP, or Medicaid. Many providers combine Lifeline with their own low-cost plans, which for some qualifying seniors reduces the bill to nearly nothing. What to do? Apply directly at lifelinesupport.org. You'll need proof of income or proof that you receive one of the qualifying programs. Number 8, your grocery bill, the Supplemental Nutrition Assistance Program, SNAP, isn't just for young families. Seniors are one of the most under-enrolled groups in the entire program, largely because many assume their Social Security income disqualifies them. It often doesn't. Seniors get special treatment under SNAP rules. Unlike younger applicants, there's no work requirement, and a special medical expense deduction lets you subtract out-of-pocket medical costs over $35 a month from your income calculation, which can push otherwise ineligible seniors under the limit. What to do? Apply through your state's SNAP office or online benefits portal. If you're not sure whether you qualify, apply anyway. A denial costs you nothing, and the income calculation includes deductions many people don't know to claim. Number 7, your water and sewer bill. There's no single nationwide program for water bills the way there is for energy. A federal pilot program that once covered this expired in 2023, but most water utilities in many cities and counties run their own low-income customer assistance programs, sometimes called CAPs, that reduce or discount water and sewer charges for qualifying households. These are typically run locally, so the rules differ by city or utility provider, and some areas don't offer one at all. What to do? Call your water provider directly and ask if they have a customer assistance program, low-income discount, or hardship rate for water and sewer service. If you can't find anything, dial 211 for a local referral. Number 6, your heating and cooling bill right now. The Low Income Home Energy Assistance Program, LIHEAP, is one of the biggest, most established assistance programs in the country, and it is fully funded for the current federal fiscal year. It helps pay heating and cooling bills directly, and in some states also covers emergency situations like a shutoff notice or broken furnace. Benefits vary by state. In Pennsylvania, for example, cash grants for the current heating season range from $200 to $1,000 depending on household size, income, and fuel type. If you already receive SNAP, SSI, or TANF, most states will automatically consider you income eligible, skipping the paperwork entirely. One thing worth knowing honestly, this program's funding has faced political uncertainty. It was fully released for this fiscal year, but a future federal budget proposal has suggested eliminating it. That makes applying this season while funding is confirmed more important than waiting. What to do? Contact your local community action agency, search LIHEAP plus your state, or call 211. Applications typically open seasonally, so apply as soon as your state's window opens rather than waiting for a bill to become overdue. Number 5, your home energy bill permanently. This one is different from LIHEAP, and a lot of people confuse the two. The Weatherization Assistance Program, run by the U.S. Department of Energy, doesn't send you cash for one season. It pays for permanent home upgrades, insulation, air sealing, and sometimes a furnace tune-up or replacement, all installed by a certified crew at no cost to you. Eligibility is generally set at or below 200% of the federal poverty level, and if you receive SSI, you typically qualify automatically. Because the upgrades are physical and permanent, the savings continue every single month for as long as you live in the home. This is the one item on this list that keeps paying you back for years, not just one season. What to do? Apply through the same community action agency that handles LIHEAP in most states. One phone call can get you screened for both at once. Number 4, your Medicare drug costs. If you're on Medicare Part D and your income is limited, a federal program called Extra Help, also known as the Low Income Subsidy, can eliminate most of what you pay for prescription drugs. For 2026, if you qualify for full Extra Help, your Part D deductible drops to $0, and your copay is capped at $5.10 for generic drugs and $12.65 for brand name drugs, no matter how many prescriptions you fill in a month. The asset limits are more generous than people expect, up to $18,090 for an individual and $36,100 for a couple, not counting your home or car. What to do? Apply directly through the Social Security Administration, either online at ssa.gov or by calling 1-8007-721-213. If you already qualify for a Medicare savings program, the one we're covering next, you're enrolled in Extra Help automatically. Number 3, the Medicare Surcharge. Most people don't know you can appeal. Here's the one almost nobody applies for, mostly because almost nobody knows it exists. If your income was higher a couple of years ago, say while you were still working, Medicare may currently be charging you an income-related surcharge on your Part B and Part D premiums, called IRMAA. This surcharge is based on your tax return from 2 years earlier. The problem, if you've since retired, lost a spouse, or had another major life change, that old tax return no longer reflects your real income, and you may be paying a surcharge you no longer owe. There's a specific form for this, SSA 44, Medicare Income-Related Monthly Adjustment Amount Life-Changing Event. It lets you report the life change and request that your premium be recalculated based on your current lower income instead of the outdated figure. What to do? If you retired, reduced your hours, or lost a spouse in the past couple of years and you're paying an IRMAA surcharge, download Form SSA 44 from ssa.gov and submit it with documentation of the life change. This single form has reduced or eliminated surcharges worth hundreds of dollars a month for people who didn't know to ask. Number 2, your Medicare Part B. Premium itself. Beyond IRMAA, there's a separate set of programs that can pay your Part B premium entirely for people with more limited income. The Medicare Savings Programs run by your state. There are 3 main versions. The Qualified Medicare Beneficiary Program for the lowest incomes pays your Part A premium if you have one, your Part B premium, and your deductibles, copays, and co-insurance. The Specified Low Income Beneficiary Program and the Qualifying Individual Program for slightly higher incomes pay the Part B premium only, worth $202.90 a month, or roughly $2,435 a year in 2026. Income limits are higher than most people assume. In most states, a single person can qualify for the most basic version with monthly income up to around $1,616, and some states don't count assets at all. What to do? Contact your state Medicaid office and ask specifically about Medicare savings programs, not general Medicaid. The application usually takes under an hour, and your home, car, and personal belongings don't count against you. Number 1, your property tax bill. This is the biggest number on the list, and the one with the most state-by-state variation, so listen carefully for your state. No state eliminates property taxes for seniors purely based on age, but the combined value of exemptions, freezes, and deferrals available across the country is enormous. In Texas, homeowners 65 and older get an additional homestead exemption on top of the standard one, plus a permanent freeze on the school tax portion of their bill. Once you qualify, that portion cannot increase again, ever, as long as you stay in the home. In New York, the enhanced STAR and senior citizens exemption programs can reduce a home's taxable value by up to 65% in some localities, depending on income. In New Jersey, the Senior Freeze program reimburses you for any property tax increase above the year you first qualified. In Illinois, a separate assessment freeze locks in your home's assessed value, and a deferral program lets you postpone up to $7,500 in taxes per year at a modest interest rate rather than paying now. Across these programs, typical annual savings for a qualifying senior commonly fall in the hundreds to low thousands of dollars, and in some high-value markets, considerably more. But nearly all of them share the same catch. You must file an application, usually with a hard deadline, often as early as February or March of the year you turn 65, and missing that window in many states means waiting an entire year to try again. What to do? This week, call your county assessor's office directly and ask 2 questions. What senior exemptions do you offer, and what's the deadline to apply? Ask about exemptions, freezes, and deferrals separately. In many states, you can combine more than one. You don't need to apply for all 11 at once. Start with these 5 calls. 1. Call your county assessor's office about property tax exemptions and freezes. This is usually the single largest dollar amount on the list. 2. Call your state Medicaid office and ask about Medicare savings programs, which can eliminate your Part B premium entirely. 3. If you retired or had a major income change in the past 2 years, download Form SSA 44 from SSA.gov to challenge an outdated IRMAA surcharge. 4. Contact your local community action agency for LIHEAP and the Weatherization Assistance Program in the same phone call. 5. Apply for Lifeline at lifelinesupport.org for a discount on your phone or internet bill. None of these programs are secret. They're just quiet. Nobody mails you a letter saying you qualify when the system waits for you to ask. You paid into this country for decades. Asking what you're owed back isn't taking a handout. It's collecting on a promise that's already been paid for. If you know a senior who's never heard of even one of these programs, send them this video. The property tax one alone is worth a phone call for almost everyone watching. Next week, we're covering the 5 most common mistakes people make when applying for Medicaid long-term care coverage, and the one paperwork error that can delay approval by months.